Hello, everyone, and welcome. My name is Carter Hoffman. I'm the Trade and Technology Editor at Treasury Payments. I want to thank those of you that are joining us here live and also those that may be watching the recording a little bit later on. I, for one, really excited to be here today because this is the official launch of the Exporter's Playbook, which is a very in-depth guide on all things exporting that, alongside Holly and Sylwia, who we'll introduce here in a moment, we've really been working on for quite some time. So it's pretty amazing to finally see all of that work actually come to life. And I think it's really an important one, especially from where I sit at TTP, because exports really are ultimately at the core of everything that we talk about and report on, right? So we'll cover all kinds of trade finance activities, insurance, tech, legal, the list really goes on. But when you peel back all of those layers, what you're left with is ultimately that export. Now, unfortunately, for a lot of businesses, moving from selling within your own borders to selling abroad, whether that's to a country that's right next door or somewhere halfway around the world, that can feel like such a massive leap in complexity. And for many of those businesses, that in itself is enough to discourage them from taking that step into exporting and reaching other markets. So that's something that we're hoping this guide is going to be able to help change, and something that, hopefully this conversation today is also going to be able to help change, really by helping to bring in some clarity into that seemingly daunting realm, really, that is exporting. Now, before I formally bring Holly and Sylwia into the conversation, there's just a few housekeeping points that I want to bring up. So first, the full guide is now officially available for download. So there's a QR code that's, if it's not already there, is going to be on your screen shortly, that will link to the TTP website where you're going to be able to download that guide. So we're also going to be sending out an email afterwards to everyone that's registered for the webinar. So you'll have that in your inbox shortly. Now, secondly, for those of you that are watching this live, we've set aside some time at the end for a Q&A. So please do make sure you drop your questions in the comments throughout the session, and we'll try to make sure that we have time at the end to get through and answer as many of them as we can. So on that note, that's plenty of talking from me. So I would like to officially welcome the authors of the Exporter's Playbook. Holly, Sylwia, welcome and thank you for being here.
Hello.
Hello.
Hey. So we'll start off with just a quick introduction. So Holly, I'll start with you. You want to just give us, a little bit about yourself, your background, and perhaps what prompted you to want to help write this guide?
Yes, of course. So hello, my name's Holly Piggott. I'm Director of Alinea Customs. We're a UK-based customs brokerage. I have a Master's in International Corporate and Commercial Law, and a diploma in advanced customs compliance. Just as a brief legal disclaimer, I will outline that the views provided in this webinar and also in the guide represent my own views, and that they are provided for information only, and for any specific bespoke advice, specific advice for your organisation should be taken.
Thanks, Ollie. Sylwia?
So, hi everyone. I'm really happy to be here. So I'm a global trade technology manager at Safran, former Collins Aerospace, and my background is in engineering, automotive, and aerospace and defense in customs and global trade. I'm also an independent researcher, so I'm getting involved in topics around the customs and trade automation and digitalization, and border risk management and border operations, which is something I actually would like to expand on more. And why I co-author this Exporters Playbook, to me, it's all about the knowledge sharing and supporting other customs professionals with various hints and tips. Thank you.
Awesome. Thanks, Sylwia. So before we really get into everything here, just a quick note. The guide itself broken down into 4 main chapters. So we cover customs valuation, HS system, rules of origin, and Incoterms. So throughout the conversation here, we're going to go and kind of look at each of those topic areas in a little bit more depth. So naturally, we're going to start off with the first chapter that we cover in the guide, which is customs valuations. So Holly, to start us off, just generally speaking, when traders hear the term customs valuation, what should they really mean that to understand in practice? And I guess also, why does that matter so much for cross-border business today?
So, customs valuation is based upon a harmonized framework established by the World Trade Organization and then adopted in regional policy between contracting members of the WTO. So, customs valuation doesn't just mean the value on your invoice that you send to your client as an exporter. It will also include various aspects such as any assists, the price of packaging, and when shipping to the UK or the EU, it will also include insurance and freight costs. Whereas when shipping to the United States, the customs valuation will be based upon the free on board value. And there's 6 main methods of customs valuation that have to be applied on a consecutive basis. So the transaction value is used in more than 90% of global trade, and that really represents when a sale between unrelated parties is made. If no sale is made, for example, samples are being sent across borders, whether perhaps a multinational organization is sending goods which they own between their distribution hubs, or perhaps when the sale is being made between related parties, it might not be appropriate for valuation method 1 to be used. It may be if it's conducted at an independent arm's length price. Alternatively, the use of valuation method 2 to 6 should be examined, and 4 and 5 are interchangeable.
So given, as you said, 6 different valuation methods, I'd imagine that there is, some degree of confusions and surprises that companies might run into as they're dealing with these different methods, especially across different jurisdictions. So I guess from your experience, what are some of those issues that tend to surprise some of those companies when they're dealing with all of these different methods and different ways of valuing some of their goods that are going across borders?
Absolutely. So I would say for multinational corporations, a key element can be getting transfer pricing right. So the net margin method, which will often rely on an end of year reconciliation, is not necessarily always the best method to use to align with the WTO rules on customs valuation. Whereas for SMEs, for example, e-commerce is expanding on a rapid global basis, and we'll see smaller companies shipping to distribution hubs without making a sale. They sell from the distribution hub. And in that case, generally, we would see the deducted value or the computed value as being the anticipated method. And on many occasions, companies just aren't prepared to it, and they might ship their goods without considering the customs valuation methodology in advance.
Thanks, Holly. So, Sylwia, I want to bring you in to the conversation as well. Could you share some of your experiences around perhaps how you've supported businesses in the past in establishing the transaction value of those goods, kind of from a bit more of a practical standpoint?
Sure, I can definitely recall some of the examples in the past. So when I was working in automotive, as part of a customs site audit, I needed to check the assist, or in other words, tooling. So if the price of the molds or the machinery from overseas used in the production of the parts which were then imported was adequately calculated and added. So this involved, I remember getting the list from the finance department on the company assets from outside of the UK. And sometimes it involved reaching out to the suppliers and finding out if there were the tooling payments. So yeah, the assessment also included the costs of the trademarks, engineering, any royalties, etc. So yeah, that was the part of that was covered in the customs site audit.
Awesome, thank you. And I think it's important to remember here that when you're dealing with exporting cross-border trade, by definition, that involves multiple different jurisdictions being involved in that process. So I guess, Holly, coming back to you, of course, when you're dealing with different jurisdictions, there's going to be perhaps slightly different approaches to dealing with things across those different regions and whatnot. So how should traders go about, managing all the complexity that naturally comes with something of that sort without, internally turning it into, I guess, a bit of a bureaucratic nightmare, really?
Absolutely, that's such a good question. So I would suggest increasingly companies are establishing methods of customs compliance within their ERP systems, which identifies when a sale is made for their goods, or when the goods are being shipped across borders, and identifying different rules related to customs valuation for each jurisdiction. So, for example, in the United States, we might have the implementation of the fair sale rule, or when shipping to the EU or UK, it will be the last sale which accounts for their valuation related to the invoice. So at Alinea Customs, we implement customs consultancy addressing strategic implementation of a customs valuation roadmap. And that will address 3 phases. So, for example, we will set up customs valuation planning a shipment between 2 entities, reviewing the guiding principles of customs valuation, and strategic plan of key inputs related to assists, royalties, the cost of packaging, freight, insurance where relevant. And then phase 2 will be creation of a data set to support the customs valuation methodology and Incoterms. Review in accordance with transfer pricing principles in circumstances where an interbranch transfer of goods has occurred. Indicate on paperwork the appropriate customs valuation methodology, and ensure that customs valuation instructions have been provided to the importing customs broker in the region of destination. And then finally, phase 3 will address the defining and implementation of the customs valuation plan, which will involve training across the organisation and review of import documentation received from customs brokers to ensure that the appropriate valuation method has been applied, and also taking steps if it hasn't been applied correctly to address that through a post-clearance amendment.
Thanks, Alex. So I guess that's a very good overview there of, I guess, some of the best practices involved and what you should do. Sylwia, I'm curious, from your experience, what are some of the common valuation pitfalls, I suppose, that you've seen when it comes to importing goods there?
Sure. So yeah, there were a couple. So what I've seen in the past was the very low values stated on commercial invoices, such as like £1, £2 for some marketing goods, like the mags or the notebooks. So when I actually challenged a colleague who imported these goods, quite often I had to explain that there is no such a thing as free of charge or the symbolic value in the eyes of customs. and the real value of an item must be provided by the seller. Sometimes I had to actually reach out to the suppliers and asking directly what is the real value of the goods they shipped, despite of their act of goodwill. For the customs purposes, the import declaration must represent the true value and not discounted or the symbolic value, even if the goods were of the preferential origin. So.
Awesome. Yeah, thank you. And I want to pick up on one thing you said there, which is, in the eyes of customs, there's this view that, you can't have something that's worth zero. But also in the eyes of customs, there's this entire classification system of how you classify goods, which is what we cover in chapter 2 of the guide, which is that harmonized system. So moving on to that, Holly, before we kind of get into, some of the weeds and some of the details on that, can you just start by quickly explaining what that harmonized system actually is, and I guess why it really sits at the heart of almost every cross-border transaction?
Absolutely. So, I think the HS system it's widely referred to as an international economic language, which enables trade to flow relatively smoothly across borders. So the HS system was known as a harmonized system introduced by the World Customs Organization on the 1st of January 1988, and initially 37 contracting nations used it. Now it's used by over 200 countries, representing 98% of global trade.
Amazing, thank you. So, and again, of course, when you look at the HS system kind of from a high level, almost theoretically, it can seem, almost straightforward, right? You've got different numbers, different chapters, different headings. The idea being you pick the right one, you kind of move on with your export. But of course, as with anything, when you actually start digging into it in practice, it's never quite that simple. So Sylwia, I want to come to you. Can you talk us through, some of the complexity that might be involved with applying that HS system in practice, especially when traders start applying it to some of these real world situations that they're going to be dealing with?
Yes, of course. First of all, in order to classify a product, you must have all sufficient information. In some cases, there are many technical details involved. So, for example, 8544 heading, except for defining the product, for example, if it's a winding wire or ignition wiring set, to classify insulated wire or cable, you need to, for example, know if the voltage exceeds 1000 volt or not, to start with, then going into through all the descriptions. In some cases, you need to know what's the diameter or the length. In some other cases, the material make plays a key role, especially when it comes to the goods such as seals, because you can have the paper seals, rubber seals, plastic, mechanical, and they will all fall under different HS codes. So once you think you found the right classification, and of course you have to follow all the GRI rules, it is essential that you go through the section and the chapter notes, the subheading notes, and any additional chapter notes, and look out for any exclusions and what this section does not cover. So yeah, it's quite, sometimes it can get really tricky. So having all the information on hand, sometimes liaising with the engineering or the suppliers is essential to get to that level of details to allow you to classify an item.
Thanks, Sylwia. So you mentioned the GRI rules there. Can you just quickly, expand on what that might be?
Sure. So these are called like a golden rules of the classifications, and there are 6 GRR rules in total. So I think these were defined by the WCO, and following them in order is very essential, and majority of the goods will fall under the GRI number one, about 95% of them, which is essentially AO nomine from Latin, which means what is the name, what is the essential characteristics of the product.
Awesome, thank you. So Holly, I want to come back to you. So again, similar question that I asked you on chapter one, being that, a lot of times the application of the HS system might vary from jurisdiction to jurisdiction, because of course we're dealing with multi-jurisdictional issues here when we're trading. So how can companies think about managing classifications, especially when some of those jurisdictions might interpret some of those same HS structures in slightly different ways?
Of course. So the HS code is the first 6 digits of a commodity code. Generally, at regional level, the HS code will be extended to 10 digits, particularly in the UK, the European Union, and the United States. So regional variations will occur within the final 8 and 10 digits. And it's at that level where the application of tariffs, the VAT rate, quota, anti-dumping duties, and countervailing duties will generally be applied, in addition to the application of prohibitions and restrictions. So it's really important to make sure that inventory isn't, companies don't just rely on their suppliers to classify their goods using an HS code, but they examine any regional variations. And whilst product-specific rules of origin are generally applied at HS level, tariffs will generally be applied at that regional level. And it's really important to maintain a separate inventory file for each regional jurisdiction.
Amazing, thank you. Now, Sylwia, I want to come back to you because you mentioned in your introduction that you spent some time working in, engineering, automotive, aerospace, a lot of those, complex areas where you're dealing with lots of parts coming in from all over the world. So I guess from your perspective in these spaces, what are some of those best practices that you would recommend for, making sure that you're classifying these products correctly?
Sure. The first thing I have to say that is the rationale is just as important as the classification itself. My recommendation would be to document the good work you do when you are arriving at the tariff classification. Some companies, like in the past within the engineering, I used to produce the logic papers. In automotive, these were called defense papers. And basically, this is where you show your logic, how you are arriving at the right classification. Also, drawing examples from the BTIs, the binding tariff informations, advanced rulings, or the cross rulings. Another tip would be to having the HTS database is very useful to support the future classifications for same or the similar products. I think these would be the key 2 ones that I would recommend.
Yeah, amazing. Thank you. So, building some of those logic forms, keeping detailed documentation on everything. So I guess, Holly, coming back to you, when you think about, I guess, the scale and the scope of some of these businesses that might be dealing with, thousands or more different parts and components coming in, I'd imagine with all of these different aspects that Sylwia just touched on, it can be a bit of a compliance nightmare internally dealing with everything. So, what are some, I guess, practical tips that you could recommend for companies to build kind of consistency and control into those processes, before they start experiencing problems at the borders and wish that they'd had them in place long beforehand?
Absolutely, and it does frequently happen. We recently worked with a global luxury fashion brand organising their tariff classification for goods being shipped from Europe to the United States, and we had to reclassify 98% of their inventory across around 5,000 products. And really drawing from what Sylwia's suggested, which is maintaining a clear identification of how a tariff classification valuation has been determined, and particularly addressing regional variations. So we would see, say, a blue pair of women's denim jeans be classified completely differently at regional level between India, the United States, and the UK. Additionally, a flat rolled steel product would be. So I would suggest establish a robust tariff classification framework, make use of modern technology and use of ERP integrations, so you don't have to consult one Excel file, so you have the master data set established in your inventory systems, and not just per product, but per region, which is really important. And that really, as an exporter, will support your view with best practice when making sales on an international basis, because your suppliers, your customers, and the procurement management of the companies which buy your goods can be confident that you have actually addressed their market. So creating a centralized tariff classification inventory, assigning internal ownership and documenting how tariff classification has occurred, review of general interpretive rules, and as Sylwia said, use of advanced binding tariff information and advanced rulings where relevant. And validating suppliers' codes provided by suppliers. We often, most frequently, see companies just relying on their suppliers for the data and using internal review. And then finally, training, again, prioritizing training across organizations and use of modern technology such as ERP systems can really improve internal practices.
Thanks, Ollie. So it sounds like clearly a lot of steps that companies can take to make sure that they're able to do this internally, and something that I'd imagine there's a lot of experts out there that would be able to help out with coming in as well. So again, now at this point, we've covered customs valuation, we've covered that HS system. So I want to move on now to talk about rules of origin, which was the third main chapter that we covered in that guide. So Sylwia, again, before we get into some of that, specific and nuance that comes behind this general concept of rules of origin, can you just quickly explain, what rules of origin, what it means, kind of how they're used, and again, why they're important for exporters to understand?
Yes, of course. So the rules of origin, as defined by the World Customs Organization Annex K of the revised Kyoto Convention, are defined as the specific provisions which are set by the countries to determine the origin of traded goods, or in other words, their economic nationality. And these are integral element of any free trade agreements. So alongside the HS, a harmonized system, customs valuation and Incoterms, these create like a fundament to the trade and customs compliance. There are two types of origin. So the first is non-preferential. It's mainly used for the trade statistics, but also for origin labeling, anti-dumping, countervailing, and sanctions measures, provided the country, of course, applies the WTO rules. The second type is the preferential rules of origin, which are used for free trade agreement purposes. And briefly speaking, if these are managed and applied correctly, they offer monetary savings to importers by reducing or completely eliminating the duties.
Thank you. Yeah, so preferential, non-preferential. A lot of people that are exploring the space for the first time would probably see a lot of other terms out there, things like wholly obtained or substantial transformation. So I guess, Holly, coming to you, what do distinctions in those terms, I just mentioned wholly obtained, substantial transformation, other things like that, why do those matter so much when it comes to, how a product is treated in that customs process?
So put quite simply, so a wholly obtained product will mean that it's been sourced in its entirety from a particular country, whereas a substantially transformed product would have perhaps had components from other countries, and it will adhere to one of three particular rules. So either a tariff shift will have occurred, or it will have sufficient value-added content, usually on a percentage basis, which enables it to be considered as a particular region's economic origin, or it will have undertaken specific processing in accordance with the product-specific rules for the particular underlying trade agreement where tariff preference is being claimed. And for exporters, it's often an obligation and invariably a legal obligation to ensure that they hold the correct bill of materials, supplier declaration. So when they issue a statement of origin or a certificate of origin for their product, the customs authorities in the importing region can be confident that it's been accurately issued.
Thanks, Holly. Yeah, so there's, of course, a lot of different ways that things can be classified there. Sylwia, I know before you mentioned that these are important, especially when you're dealing with free trade agreements, because it can provide some of those duty savings when a lot of these calculations are done right. But as I'm sure a lot of exporters that have tried to do this for the first time or who are new to the space, they can recognize that a lot of those calculations, might be rather difficult to do. So I guess, Sylvia, my question to you is, what are some of those common processes or steps that someone in this space might be able to take to make sure that they're able to do these calculations correctly and really get those advantages of those free trade agreements?
Of course, the preferential origin calculations are hugely important. And actually, in our exporters playbook, there is one specific example of an automotive supplier checking out the rules of origin under the trade cooperation agreement for their product. Just let me walk you through this particular example because it's of the high relevance. So we've got a British automotive supplier who produces car seats and needs to calculate the origin of its manufactured goods for a customer, let's say in Czech Republic. So aware of the FTA exists between the UK and the EU, which is the TCA, the supplier refers to the HS heading 9401 to review the specific rule of origin for that particular product. The supplier finds that the heading 9401 falls under column 1, which is 941-9406, and notes that the column 2 sets out the following rule, which is the CTH or the maximum 50%. And you can find that, we can see it on the screen now. So that specific example can be found on page 1081 of the TCA. Now, what it means in practice for the product to obtain originating or preferential status, it must either meet the tariff shift requirement, so for change in tariff heading CTH, meaning all components incorporated into that product must fall under a different HS heading than 9401, or the product must contain at least 50% originating content based on the X works value. Next, the calculation itself. So depending on the manufacturer and trade compliance, automation and customs operations, some manufacturers keep it simple due to the nature of the products. For example, they are not very complex. They can actually use the bill of material to do the origin assessment on a part. And actually, the example of such bill of material assessment it can actually be found in our playbook. So please do feel free to check it out. If goods and operations are very complex, the business can choose to automate the process using the custom software with origin management feature, which is something I have explored in my other research, which I think that there will be a link there in the playbook, should you wish to also explore a little bit more on that.
Amazing, thank you, Sylvia. So I want to pick up on some of those points that you just mentioned, but I want to bring Holly back in. So of course, doing some of those calculations, determining the origin of a product, sounds like it can be a little bit complex from the example that Sylvia just walked us through. So I suppose, Holly, what are some of the steps that exporters can take, when they're trying to determine origin in a way that they'd be able to defend if it was ever, brought up or challenged later on down the road?
So absolutely. So firstly, it's important to review the product-specific rules related to the underlying trade agreements, such as the TCA, which Sylvia's mentioned. We can also see the CPTPP is popular, the UK-Japan CEPA, and we have the forthcoming India-UK Free Trade Agreement, which would have lots of inquiries addressing compliance about. Now, there will be product-specific rules, as Sylwia was just brought up, for each specific HS code. And so the first step, confirm your HS code for the product, look it up in the free trade agreement and address, can we as an organisation accurately claim tariff preferences and issue a certificate of origin or statement of origin for this product? And then collect, if the goods aren't wholly originating, it's really important to collect any invoices from suppliers to work out how the product specific rules have been met, where the value added components are achieved, because usually the value added elements of meeting PSR rules are based upon the X works value of the product. And then maintaining a clear compliance trail, compliance matrix, or frequently using, if the products are particularly complex, using origin software, as Sylwia mentioned.
Awesome, thanks, Holly. So again, a solid overview of some of the best practices to follow in the space. So Sylwia, I guess coming to you, even though we might follow those best practices a lot of times, I'm sure that there's often issues that come up or some common pitfalls that exporters might fall into.
Yeah.
Do you have any examples that you've seen of common issues that have come up when organizations are trying to claim those preferential origins on some imports or exports?
Yes, I do have a couple of examples. So a lot of times when I was doing customs auditing, I've seen, unfortunately, a lot of courier companies claiming preferential origin only based on the country of dispatch. I can't even remember the amount of times I was going into the discussion with such agents, trying to explain the differences or the couriers ignoring the supplier markings indicating if goods are of preferential or non-preferential origin. And I completely understand sometimes this information should have been displayed more in a more clear way. But another issue is I think it's quite common from what I've seen within the trade community, is claiming the importer's knowledge under the TCA and assuming that no checks needs to be done by the importer, which is completely wrong. The suppliers must ensure the origin calculations are conducted and should be ready to present them when challenged. Also that, which is why it's really important that checking the status and document codes in addition to preference codes is a really good practice. And any entries with any discrepancies, they should be amended with the corrective action to follow.
Thanks, Sylwia. And I want to kind of pick up on one of the themes that you mentioned there, which is some of that misunderstanding between the different parties as to who's responsible for what activity. And that's a pretty good segue into the next section here, the next chapter, which is Incoterms. So of course, well, I mean, I'll let you explain the Incoterms, but they're one of those things that can really help clarify who, when they're used correctly, who in a transaction is taking on which responsibilities. So I guess, Sylwia, I'll come back to you for this one. Can you, again, briefly expand on what those Incoterms are and why they play such an important role in trade relationships?
Yes, of course. So these are the international commercial terms, which are commonly known as Incoterms, as you mentioned. These are defined by the International Chamber of Commerce as a set of 11 three-letter trade terms, reflecting business-to-business practice in contracts for the sale or and purchase of the goods. So these were first published by the ICC in 1936. These are also revised every 10 years. I think the latest edition was released in 2020. So these global standards, they provide a common ground and define the delivery risks, the responsibilities between the sellers and the buyers, and of course the allocation of the costs. And Incoterms also clarify which party in the transaction or in the sales contract is responsible, as you've mentioned, for the export and import clearances and for paying the taxes and the duties. So yeah, there are 11 Incoterms, and each is representing a different delivery term and the conditions.
Thanks, Sylvia. And Holly, I know in the guide we walk through a lot of those Incoterms in a bit of detail, but can you just kind of at a higher level walk through, some of the main groupings and maybe give some examples of some of the more commonly used ones that you see in practice?
Absolutely. So it might be useful to consider to group Incoterms by modes of transport. So XWorks, FCA, CPT, CIP, DAP, GPU, and DVP can be used for any mode of transport. We would particularly see free carrier and carriage paid to use within container shipping. And then the four Incoterms related to the use of sea and inland waterways would be FAS, free alongside ship, FOB, free on board, CFR, custom freight, and CIF, which is cost, insurance, and freight. So for experienced traders, we'll generally see FCA, CPT, and DAP used, and for road and container shipping, whereas for FOB and CIF would be used for bulk and out-of-gauge cargo. And interestingly, English common law concerning the sale of goods particularly addresses CIF and FOB contracts developed through long-standing mercantile practice and case law, and there's a body of case law addressing the use of FOB and CIF contracts, in which case free documents must be tendered in the CIF contract, which is a bill of lading, the insurance policy, and an invoice, giving rise to a right to conforming documents and also to conforming goods.
Awesome, thanks, Holly. So yeah, I mean, hearing that, to someone who's new to the space, I'd imagine hearing a lot of those different terms, it can really sound like a bit of an alphabet soup almost, a bunch of different letters that might not mean much to someone who's very new to the space, but still trying to figure out how to use these and apply these for their specific transactions. So Sylvia, I guess coming to you, what are some tactics or ideas that businesses that again might be new to the space could use when trying to make sure that they're choosing the right Incoterm for their particular shipment?
So first of all, you have to consider what is the type of the goods that are being shipped, whether the goods are actually containerized or non-containerized, sorry. So for example, there are four Incoterms: FAS, FOB, CFR, and CIF, which are for the sea and inland waterway only. And these apply to non-containerized goods, such as roll-off goods like the vehicles or the industrial equipment on wheels. So it is therefore important to choose the right Incoterm for the right type of goods, the distance, and of course the mode of transport. Secondly, as Holly mentioned earlier, the agreement with the customer or supplier, whether that's agreed in the sales contract, the purchase order, unless the sales contract does not include the Incoterm. In such case, written agreement between the parties is considered the best practice, and stating the Incoterm in the shipping paperwork. And for example, quite often I see the Incoterm stated on the commercial invoice. And additionally, it's exceptionally important is when you import in the goods into the UK, Incoterms are mandatory to be stated in import declaration. So they should, by all means, should never be undermined.
Absolutely.
Awesome, thank you. Yeah, so Holly, coming to you. So if they are mandatory in the UK, obviously businesses that are importing or exporting are going to be seeing these all the time. So what are some common signs that exporters should watch for, to suggest that an Incoterm might not be be being used properly in some of their contracts or documentation or whatever it might be?
So I would say XWorks and DDP frequently present issues. So XWorks is often used by exporters who are inexperienced. They will consider buy sell on an XWorks basis. The buyer can conduct all of the arrangements relating to the goods, and that if they decide to zero rate the VAT, which we would expect them to do, it can mean that they don't have the supporting documentation to support the claim to zero rate VAT, in which case HMRC can legitimately request to apply VAT on the transaction, meaning that their profit margin might completely disappear. And also the customs agent, in order to apply the VAT Z code, they have to actually see a zero rated VAT invoice. And we will also, something that's come up recently is I've seen shippers in the EU use FCA or CPT Incoterms for large-scale infrastructure and engineering products without clearly defining the date of collection within the contract. And for some companies, they might purchase the goods, and the goods might be, for example, taken from Italy to Rotterdam and moved across the European Union. If they're stored in a warehouse, just an ordinary warehouse, rather than being under bond, it's possible if they pass a particular time frame, for example, 6 months, that the EU member states authorities might seek to collect local VAT on the transaction. So it's very important to clearly define all aspects, including the data collection and within a transaction. And also bear in mind that Incoterms will generally, where the requirement for customs clearance is identified, it doesn't necessarily mean that that party is obliged to provide transit documentation either. So if the goods are moving by truck, it's important to address which party provides the transit document external to the Incoterms.
Thanks, Ellie. And I want to pick up on kind of the first main issue that you mentioned there, which is, you know, some of the issues with XWorks and DDP, the two kind of extreme ends of the Incoterm scale. Mm-hmm. So, Sylwia, coming to you, why do you see these terms, you know, creating so many unintended liabilities, I suppose, in transactions that they're used in?
Sure. So I'll start with XWorks, where the seller is only required to make the goods available for collection, meaning that the loading of the goods into the vehicle is entirely at the buyer's risk, which is often very, very impractical. And when applying XWorks, the buyer would need to also arrange for the tail lift or the muffet to ensure the driver is actually responsible for the loading of the goods, and that becomes specifically troublesome or problematic when the seller premises are fitted with the loading bays designed for the non-tail lift vehicles. So if the seller's warehouse staff operates the forklifts, it's far more efficient for the seller to load the goods themselves directly into the vehicle. So such scenario would be absolutely fine under the FCA Incoterm. Another pitfall is that the seller or the exporter is not obliged to arrange for the export declaration. So where again, under the FCA, that would be completely fine. From the importer's perspective, this creates significant issues because the buyer will most likely lack access to the technical specifications to classify the goods under the harmonized system, for example. So additionally, if the seller needs to provide the proof of export to the authorities, obtaining such export declaration from the buyer can be very problematic. And believe it or not, I've heard from a lot of customs specialists about that specific problem, and it is real. So yeah, I would definitely not recommend XWorks. Use FCA instead. So yeah, because also another thing that sometimes the buyer is unable or is just unwilling to cooperate. So yeah, regarding the DDP, so I think the main one for me is that the DP places the maximum responsibility on the seller for costs and risks, including the import clearance. And that means that the seller must be registered for tax purposes in the importer's country to be able to deal with the import VAT and duties and any other associated costs, which can be really challenging to control. And some of the countries like Brazil do not actually accept DDP. Authorities worldwide are generally cautious about their application of the DDP. For instance, the International Trade Administration at the US Department of Commerce is actually warning US exporters against shipping DDP to Brazil because, and I'm going to cite here, in the Brazilian legal system, US and other foreign exporters do not have the legal status to participate in the clearance of goods at the port of entry. So only the Brazilian importer or a third-party company legally established in Brazil operating on behalf of an importer may clear goods and pay the respective duties and the taxes. So we did provide a couple more examples of around the dangers of the DDP and X works in our exporters playbook. So yeah, please feel free to check it out. I've put some really good examples there as well.
Yeah, thank you. And yeah, please do, anybody watching this, please do download that guide, give it a read through. There's a lot of really good information in there. And again, Sylwia, the point that you touched on there, where again, some of the legislation is different jurisdiction to jurisdiction when you're dealing abroad, echoes a lot of those points that we made earlier, where, you know, things are just a little bit different country to country. You need to make sure that you understand all of those. So that's a really good overview of Incoterms there. And I know we only have a couple minutes left, so I do want to make sure that we have some time for audience questions. So if there's any questions out there, please do drop them in the chat. We'll make sure that we get to some of those. But I guess generally speaking, and Holly, I'll come to you for this question, but we've talked about these 4 themes and these 4 chapters in isolation throughout this conversation. They are broken down into different chapters throughout the guide. But obviously, when you're dealing with a trade transaction, you know, all of these aspects are going to come in. So I guess looking across those 4 themes, right? Valuation, classification, origin, Incoterms, and I guess anything else out there that's going to be involved in this, where do exporters need to understand how these all fit together? And I guess specifically as well, where do they tend perhaps to underestimate some of the risk and the complexity involved in these different spaces when you're dealing with them all on aggregate there?
I would say all aspects of the trinity of customs evaluation, tariff classification, and rules of origin are important to consider, and they're globally harmonized. Also, so in terms of what's most important, I think we often are asked to enter organizations as interim trade management consultants and review lots of suppliers' paperwork and provide an opinion on whether it's correct or not and what needs to be adjusted. And bear in mind, if trade compliance isn't addressed from the outset and you are shipping to multiple companies, to retailers, wholesalers, distributors, the procurement, management, finance, operations, and logistics will be reviewing the paperwork presented, and providing accurate information can ultimately support your business in improving your economic opportunities abroad. And obviously, international trade is fascinating, and it is the intersect of geopolitics, economic growth, and I would suggest it's important to take away that it's a constantly evolving process and to prioritize training.
Yeah, thank you for that. And Sylwia, I'll come to you. So we've talked a lot about digital tools throughout the conversation here and how those can be used, especially internally, to help deal with some of that complexity and whatnot. I guess the question is, like, looking forward, where do you see some of the greatest opportunities for some of those digital tools, perhaps cutting edge digital tools, to come in and help reduce some of that compliance risk in the next few years?
It's a very broad topic, and especially the one I'm very passionate about. But it ultimately all depends on your operations, if you outsource or if you keep things internally. But from what I've seen in the past few months, that's definitely worth highlighting, is the increase of AI and machine learning in OCR technology, which is heavily utilized these days by the freight forwarders, using the OCR, scanning extracting the data from the commercial invoices and feeding them, for example, directly into the customs declaration cockpit. I know Kuehne+Nagel was running one of those trials using the ML into the OCR technology, and they were quite successful, increasing the rate of the accuracy. Something fantastic. I've seen the concepts of the digital product passport, which is like a collaboration between Altana and the Maersk. So this is something definitely to watch out for from the higher level. I've seen the so regarding the automation for the manufacturers, so for example, one would be the preferential origin management. I know there are a lot of companies providing the automation for the inward processing, FTZs, the free trade zones. First of all, the company must define their strategy and conduct the gap and cost analysis, because as much as we really like to automate things, first of all, you have to find out for yourself as a business whether that's actually worthy to apply a specific automation, considering costs for the administration, the specialist knowledge, the cost for the technology itself. As I said, it's a very, very broad topic, but definitely worth expanding on. I think we need a separate webinar to cover some of those aspects.
Yeah, no, I'd imagine we would. So I guess just looking at the time here, we only have a couple minutes left. So I want to ask Holly, I want to ask you one more question before we come into kind of that closing idea there. So I guess a lot of exporters would look at compliance really as just being a cost. And I mean, especially when you imagine some of those technological capabilities that Sylwia just mentioned, there would be ways that you could almost think of it as a bit of a competitive advantage when you're out, dealing in the competitive landscape that's out there. So how would you maybe go about framing compliance less as a cost and more of an advantage for organizations out there that are looking to really export and get in there?
Exactly. So if you are an exporter and you're approaching an international company that regularly purchases from abroad, being able to present a region-specific data set which provides assurance that you've addressed regional variations in tariff classification, you've addressed customs valuation, perhaps you have a whole inventory set that can fit with your buyer's ERP system for multinational corporations. That's a huge benefit because it means that it reduces your customers' customs compliance related costs and ultimately provides assurance related to trade compliance.
Awesome. Yeah, thank you. So again, 2 minutes left. So I just want to close out, give you each both a chance to kind of give one key message to listeners or to exporters that would be reading this guide, listening to this webinar. So I mean, Sylwia, we'll start with you, but what's that one key message that you want someone reading this guide, 6 months down the road, to still remember from when they read it? You could break down and choose just one short message.
Sure. So my key message would be, please consider the human element of it all. So consider the drivers who are stuck at the borders or maybe stuck at your facility, contractors or agency workers affected by the production line stoppages, shipping and or trade compliance staff stressing over shipments organized without the customs considerations. You would be like surprised how much the customs and trade compliance is affecting all of us within the organization. So yeah, the key message, I suppose, is I hope this exporter's playbook will provide you with some hints and tips, some comparisons, or even a new ideas to your day-to-day work, but always consider that human element of it all. That would be my key message. Thank you.
Thank you. Holly?
I would suggest to remember to review the basic elements and understand that they're not just specific to your organization, but they're harmonized on a global basis. So whilst you're addressing these 4 areas as a company, your buyer will also be addressing those 4 areas as a buyer. And being able to speak the global economic language can definitely enhance trade operations.
Amazing. Thank you both. Yeah, so again, please do download the guide. QR code's there, but as you've heard here, we've kind of talked through customs valuation, that HS system, rules of origin, Incoterms. We've heard a little bit about how, technology is coming into the space and how that might be able to revolutionize everything there down the road. But we also heard that key takeaway there to, remember the human element of it all, that it is real people at the end of the day that are involved in every step of the process throughout. So Holly, Sylwia, I want to thank you again for being here and for taking the time to, put this guide together for us. It's a very detailed, in-depth guide, but then also for being here and walking us through it a little bit. So thank you.
Thank you. It was an absolute pleasure.
Yeah, thank you. And yeah, for everyone who's watching, please do download the guide. You can see the QR code there on the screen now. So thank you and have a good day, everyone.